Good afternoon. Welcome to Green Bicep. This is week number 10 of 2023. We're in March already. And so this week the market started selling off. The Fed spoke today, meaning Powell. He was in front of Congress and he did a great job. 10 o'clock, the market sold off a bit. Overall, it's looking like a bear market is in place. We're off for the month. Year over year, we're down quite a bit. We have war going on. There's friction. Supply chains are going to get broken up at a certain point. Those that have been fixed, so prices will continue to have price pressure going forward. And so the market has resumed its downtrend. Target of 3,400 on the S&P 500. Margin contraction is likely, and so that's a 15% correction. And we started that down wave. The Fed's fund rate is likely to approach 6% or higher, so the cost of capital will go up quite a bit. Refiners and drillers, we need oil, and essentially refiners are not coming online here in the U.S., nor the drillers are really drilling, and so we're likely going to see increase in oil prices. They're currently tapped in the Strategic Petroleum Reserve, or at least of last week they were. So they're trying to control the price of oil. But if you got the World Economic Forum floating around the world, visiting countries like Colombia and saying you can't go in and drill for they can't find new discoveries. That's what they're going around, and they're pushing that. And so ultimately that's good for oil long term. Like the price of oil is bad for the consumer. So I don't know. I'm just still trying to wrap my head around this WEF and what their end goal is, because ultimately it's gonna hurt the consumer. It's gonna help the oil companies, and it's gonna give them more control over third world nations such as Colombia. And I like Colombia, so let's hope they wake up and continue to drill. India is looking good. Their economic data at the surface, I saw heavy growth, low inflation. I was impressed. So that's something I'm just going to continue to watch. Middle East tensions continue with Israel, Iran, Azerbaijan. Azerbaijan used to be part of the Soviet Union. It's now its own state. And it's a landing post for Israel as well as the U.S. to essentially put pressure on Iran. And Iran is getting support working with Russia. So we got the axes going on. China tension, and they're teaming up with Russia, which means they're teaming up with Iran indirectly, and so they just want to keep the balance of power in that region. So it's not so much Israeli as well as USA centric. Saudi Arabia is in the mix of that, where they're just playing along. I mean, we provide them a lot, so without us, they wouldn't be the great power they are today. And we helped build that region up with oil, and now they have great wealth, and now we're working as a team. China tension, essentially the CCP is not happy with the USA's narrative on China, which has been rather dogmatic, I'd have to say. So I have to agree with China in this, that the US needs to ease off. It's like, yeah. So here we have a map of this is the Soviet Union, and all these colorful lines and circles and such are states they used to control. So after 1991, all these broke off into little independent pieces, and you can see Ukraine is number 2 over here. So yeah, so this all belonged to USSR at one point. So number 5 is Georgia. Number 2, Moscow is like 100 miles away from the Ukrainian border, so I could understand why Russia doesn't like the idea of having, potentially missiles or whatever aimed at Moscow. So I don't agree with killing people, but the fact is they're losing their country. Like, they took over a lot of this land in 1920 or so, and I don't know how much death and famine happened during that period of time, but I know Stalin was not, he has a bad reputation historically at least, but who wrote those books, I don't know. But this is interesting to analyze and watch. yeah. So, key events this month. We got Powell, that was today. We got some payroll data coming up on the 10th. It's definitely, I think we're going to start to see unemployment tick up a little bit. Maybe, I don't know how soon. You know, where I'm at, they're going to lay off a lot. Probably 20% of the workforce, maybe. I might be laid off. So we'll see. That's just the way it goes. Yeah. Anyhow, so China sets modest economic targets. So this is their, Bloomberg put this out. They have amazing content where you can see I use a lot. And the growth around 5%. I've seen other targets of closer to 6%. That, to me, you know, anytime I see any sort of growth around the world or anywhere and war, I just think inflation. And I think interest rates going up, and I think me losing my job and me losing money. So, you know, it's not the best thing. Year of chop, China non-manufactured PMI and new orders in China. So we can see things are turning up in China. It looks like this is real from what I could see. The Chinese opening is real. And I think they're being tactical in how they go about doing it. And I said this prior, and we'll continue to monitor as that happens, as well as monitor in India. And then Europe, they're talking about Europe having actually a strong economy, which I don't even follow Europe, even though they're like larger than, I think, the US in total GDP. We're real close to it. But the story really is Germany with Europe, and if, you know, their supply of energy and that in Russia and the whole pipeline and all that stuff. There's a company called Vermillion, and I don't think it's actually on my list. I'm not sure if I put it on there, but they built out a lot of infrastructure in Europe over the last several years, and their capex spend has been 700 to 800 billion a year on average over the last like 5 years. And they do a lot of natural gas and oil. It's trading at a very low multiple, at a major low. Yeah, it could go down farther, but like from a risk reward perspective, that's like when you want to enter a stock, really. Like, not at, I mean, you could trade it off all-time high, but ideally you get it at the low. It just, you could argue, like if you look at Valero or PBF is at near a 5-year high. They are a refiner with no debt, and they print cash, so they're about to break a 5-year high. So you could look at that one, and with higher, great metrics as well. So there's different ways to play it. Vermillion's more of a good with options. Their options aren't as expensive, so you could buy 2025 calls, and they're reasonably priced. That's Vermillion. Now, if you look at PBF, they're quite a bit more expensive, higher price, so options are more expensive. I'm playing options because I have my portfolio. I don't think it's wise to be too much market exposure at this time. So you could buy an option contract with a lot less exposure. China, this is old. Just was some things were kicking off. I got excited and drew a little smile face. And same thing, old. I'd like to see an updated version of this. Should be out soon. Yeah, so this is money supply, and it's just shooting up. That's always a good thing for the economy to have. You know, if you see money supply contracting, that's generally not good. I mean, I'm just simplifying here. And this is from last week. It's just showing the auto exports and how China's overtaken Germany. And yeah, and it plays into the whole Russia-Germany pipeline, China dealio going on. And interesting enough, you can see that South Korea is ticking up. So they're, I mean, they make, what is it, Mazda? They make a few good cars. Yeah. It's interesting how Japan is. It's dropped quite a bit. Because this is exports. So they're, you would think with Honda and Toyota, and so they must be losing market share. The U.S. is this line here. And I know Tesla's been growing. I think they do like 50,000 vehicles annually or something. It's That can't be right. That's too low. Yeah, I don't know Tesla. I just have puts on it. And the reason why is because Tesla's in a downtrend. Its multiple is just really rich. I mean, they do generate cash. They actually drop their price of their vehicles, which to me is a negative, because then you start to get into pricing wars and who has a longer runway, General Motors or Tesla? Now, if you look at Tesla as a car company, General Motors has a longer runway, meaning they're less likely to run out of cash first if they really went into a pricing war. Like General Motors could take Tesla on, or all of them could right now. They could team up without even talking to each other, just all start dropping prices on the EVs, and Tesla would be in a world of hurt. So let's just say they're an AI company for now. They could hope. JP Morgan says sell. Now, I did say that Tesla would outperform Microsoft over the next 5 years. I do still believe that, just from the standpoint of they're just real aggressive, and Elon is an amazing communicator at marketing, and I don't know, he's just really smart about how he goes about doing things. And Microsoft is actually in a monthly downtrend, and it's never experienced that, and it's gone sideways for like a decade, and up for a decade, and sideways, and now it's actually turning down. So it's, I don't know, it's kind of wild to watch. JP Morgan says sell. Use Q1 strength in order to reduce exposure. Well, this person says it. It's interesting for them to actually publicly say that. And this is a repeat, but it's just showing how consumer credit is growing for those in the lower income bracket in the United States of America, from low 40s to the mid 50s. So essentially, Americans are the smart ones are building up debt while retaining their cash in preparation for what's to come, because the Fed has made it quite clear they're going to squeeze us out, meaning the average Joe, and the average Joe is likely to get laid off because you don't run the company, you don't decide, right? So average Joe gets laid off. So the average smart Joe now is saving their cash and building up their credit. I don't think the models have that built in, so there's another boo-boo for somebody using their Excel. And this is consumer credit. Yep, 5 trillion. Building permits, this is a repeat. Just I didn't see any new data. There was some Case-Shiller home data that came out, but it's still lagging. It's almost pointless to put it out there. We know what's happening with housing. Until interest rates really drop, housing's going to struggle. I mean, the affordability of a home is not there in most regions. So unless you're moving from New Jersey to Florida, you're not going to be able to. A lot of people can't afford a home. And then you're in a time when you're potentially might lose your job. So why would you go and take that risk at the same time? Baker Hughes, here we go, $5.99. That was over here actually, but we're at $5.92. So the trend is continuing down, which is the number of drillers. So the drillers are the ones that actually are pumping the oil. They pump the oil out, and it doesn't look good unless you're long oil. So ISM manufacturing, this is new data. It's the 4th consecutive month of falling factory activity. That is not the greatest thing you want to see. But actually the worst part of it is that inventories remain too low. So if inventory is too low, that means there's going to be price pressure. So on the positive side, so we're looking at here, this is ISM manufacturing. Over here, we're looking at non-manufacturing, so services. And price pressure has eased a little bit. I mean, this is one data point, but you can see that the trend is still down for for services, as well as for manufacturing. Sentiment from last week and the prior week, people were a little bit greedy last week through Wednesday of last week, and so everybody was starting to get a little bullish, and now the market turned over actually since then. So maybe having a week to 2 week lag will provide insight of how the market reacts. but it's still not very extreme. And this is Mr. Wilson from Dennis the Menace, right? Mr. Wilson. So we need the interest rates to drop in the US dollar too for this market to have a chance. And that's not going to happen. So Mr. Wilson's saying the market will drop, unfortunately. Unless you have puts or hedged. This is a repeat. Just saying that companies want to retain their workers, and the Fed is essentially trying to do the opposite, and it's admitting that. And here we go. We have the spreads between the US BBB and the T-bill, which is considered the safest investment in the world today. And generally, when you invest in a corporation that is ready to go bankrupt, you're going to, if you buy that bond, it'll be trading at a discount, plus you'll get a higher interest rate. And so we're looking at the spread between the two. You see that currently this spread is like nothing. And historically, when there's a spread close to zero, we get a market crash. And we're kind of there. And same here, similar, this is the 10-year note minus the 2-year bill. And you can see that unemployment, the blue line tends to follow this spread, and we're kind of at a inflection point, and it will spring up, and then we'll have unemployment kick up some, and it will kick up because I mean we're on work and they're going to lay off 20%. Meta announced another layoff, so that means all of these people are talking, all of them, especially the startups. My neighbor, he's at a startup, he's freaked out about his job, so just the beauty of it. So commodity super cycle, I threw this in here again because it's interesting. And so then I pulled up actual live data from today, and what you can see here is that this little blip up here on the commodity index is this point right here. So you can see we're kind of falling back to like this neckline, you could call it, or just a line, the consolidation. So we're at the top of it. So it should, if we drop through this too far, this cycle is not going to happen. It's likely will continue to fall down. But saying that, seeing India looking quite healthy, seeing China looking quite healthy, and seeing the U.S. looking quite healthy, I expect this to continue. Plus, we got war, so they're going to be building more tanks. They're going to be more bullets. They're going to, all that stuff's going to happen. Whether or not we use them, it doesn't matter. They're still going to push forward with that momentum. It's about showing deterrence, right? You have a strong military, you hope you never use it. And that's part of the game too. And so maintain buying power. The green bicep list. So I have a bear here. Everything I have in these PowerPoints, usually there's a reason. Like I don't just put random stuff in here. Regardless how small the detail. So maintain buying power. Okay, the 3-month bond is now at 5%. It's actually slightly over today. I hit it, which is pretty amazing. It's great if you have a boatload of cash and you're retired. Stick it in there, and you could get a 10-year. It's in the 4s, I'm guessing, somewhere's around there. Gold and silver. I threw silver in there because this gentleman I know, he goes by the name of Charlie. He's a big silver bug. And I think silver is important, and it plays a role in chips as well. I just haven't done a lot of analysis on it. But, you know, I was a gold bug back in 2002, 2003, when it was like 300 an ounce. Back then I was listening to, I guess, Tim Ord and Tom O'Brien, all those wild people. Tim Ord was good. Learned a lot from him. Bitcoin, it's the next halvings in 2024, not too far off. So it should be interesting to see if we get a price squeeze like we normally do. Warrior Met Coal, that is, they provide coal that is used for steel. Great fundamentals. Their earnings call, they said demand is robust. And I mentioned this last time. I just like the flexibility and how they could go from continent to continent, their customer base. So it's quite flexible. And I would imagine if war did kick up, you would see their mix go to the U.S. more than Asia unless the price point wasn't right. Nucor, Valero. So I added Valero here in PBF, and they're refiners, and their multiples are amazing. Their technicals look okay. PBF is about to hit a 5-year high on this chart. It could 5-year high, and I don't know. It could go up multiple times if just based upon the current price, and it has no debt as well, like zero debt. And I guess Valero, I heard they're going to pay down their debt too. So these two companies may have no debt, and the ability to build one of these in the U.S. right now is probably quite difficult, given that Congress today were asking questions about energy and this baloney, brainwash and stuff. Yeah, I was watching something. I don't watch much TV, like almost none, and it was just, I don't know how it came across this old show, and they were talking about this whole ESG stuff, and this was like a plan of it like 15 years ago. And I'm not saying the environment is not important, but it's important to have electricity go into your household, and it's important to yeah. And so this has been the theme since day one. Southeast Asia opening, and that's happening. That will drive inflation in the U.S. That will force the Fed to raise rates farther than most people expected. They're starting to see that now, so that's playing out. So with India opening up strong too, yeah, it's going to be quite interesting. Because as the margins get squeezed, meaning companies are less profitable, eventually that is going to transfer to the stock price. And like Buffett said recently, like 2 weeks ago or so, that he's has a boatload of cash he's storing up or something. That could be boatload of cash is all I heard. And it just reminded me of Buffett in 2008, and when he went and bailed out, like I think it was Goldman Sachs was one of them, right? Eagle bulk shipping. The shippers have done actually fairly well. They're just slow movers. They seem the beta on them must be very low. I mean 0.5 or something like that. So the market goes up 1%, they go up 0.5, the market goes down 1%, they go down 0.5. So it's just not highly correlated. And yeah, so dry bulk shipping has continued to jump up. The index, throwing the Canadian oil is in here as well, like Surge. They own a lot of land. Good long-term play, 5 years out. The big miners, Hive, let's see. RIOT was doing quite well today, so that caught my eye. They're U.S. based, no exposure to any foreign country. So somebody was moving into RIOT the way I saw it today, and then Bitfarms is getting destroyed, and it's a good company. So I'm not quite sure if it's just like people being forced to sell. That's likely the case. Warrior Matt, event driven. You want to have hedges. Yeah, and so at the very top I have net exposure at 34%. So ultimately that means if you have a portfolio and then you put a hedge on, like say 50% of that portfolio is short the market or puts, and the other 50 is long, that would be a net exposure of 0. So I have 34%. So I'm hedged with my Tesla puts. And I'll peel those off. Like I could peel them off tomorrow. Just it's very unlikely because I went out a few months. Because it's better to go out like 9 to 12 months with options. If you go any shorter, you better know what you're doing. You better be ready to take your profits and run. Grand Terra, they're out of Canada, and they have exposure to Colombia and Ecuador, and there's been a little bit of price moving on that company, but yeah, I don't know. We'll see. Dollar weakness. Yeah, and so that would be, if the dollar is strong, you don't want to invest in emerging markets, right? And so and the dollar has been fairly strong. So EWZ has been going, I think it's EWZ, has been going down. Yeah, EWZ, that's Brazil. And then this is basically S&P 500 with higher beta stocks in it. I think it's a good, it's hard to find a good way to hedge. That's what I've struggled with for years. So I'm starting to figure it out. Qualcomm, I don't know. They have great fundamentals, but it's on there. It looks like I have EWZ on there twice. And I haven't looked at these ARCH recently, but last time I looked, the fundamentals were phenomenal. You just get into a lot of political risk when you get into coal. That's why when I talk about HCC, that is metallurgic coal used to make steel. So they're not like, it's not like traditional coal. They're trying to like warm up your town burning coal. It's a different form. I mean, it may be just as dirty, but the optics sound better. And I have never heard anything negative about met coal. And then I have Discover on here just because it's a great company, and eventually I will own some of it. Bank of America, that's a reminder to look at the banks. I don't have any exposure to it or anything of that nature. It's just a reminder the banks at some point will have their day. So, all right. I try to keep this quick and simple. How many minutes we've been going for? Holy crap, 26. All right, so what is going on? Let's look at metals. So metals for the week. They are HRC steel. Wow. It's up 44% for the month. For the week, steel is up 1.2%. Year over year, it's down 17%. So seeing steel down 17% year over year, that tells you like if you're starting to buy like metallurgic coal or steel companies, you might be getting, at an okay price because steel is not up 20%, it's down. Like coal is down 55% year over year and 6% for the week. So coal's getting like whacked pretty good. I don't mess with coal. Propane, Urals oil. Yeah, and that is off 40% year over year, but up 15% for the week. It's a big move. Looking at ag. Ag is actually looking healthier. When I say that, prices are not shooting up across the board. So ag is down on a majority of these for the week. Potatoes up 2.5%. George Bush Jr. How do you spell potato? Right? Well, this is actually potatoes. So you gotta get your potato right. But potatoes are up 45% year. How could a potato be up 45% year over year? Really? It has to do, I don't know. I mean, shipping cost. Well, diesel. Actually, where's diesel on here? Okay, we're looking at some of the... Fortunately, you could just hit stop and not listen. Well, I can't find my diesel here. Coal... You know what? They don't have diesel on here. So they have Brent down 22% year over year. Crude oil down 26%. Gasoline. But diesel... So diesel is made out of, I think, a heavier grade oil. I need to listen to Shabam's videos. Unfortunately, I don't have the time. Yeah, so anyhow. Oh my god, eggs are eggs, eggs are up 6% on the week. Now I know everybody wants to have a freaking chicken until they like crap all over their. I don't think I'll ever like even if I have a farm, I'm not having a chicken. I'll have a cow. I'll have a couple, 3 or 4 cattle, or probably a cow. I don't know. That'd be a pain to milk a cow like every day, twice a day. Yeah, I don't know about having a cow. So eggs are up 105% year over year. For the week, 6%. I guess I'd have a cow only in the situation where like Armageddon's happening. But overall, year over year livestock, everything's majority of things are up 20% year over year. And for the week, it's like not too bad, but yeah. It's interesting. Now the industrial metals, they're way down year over year. Like 50, 30% all over the place. And when we're looking at the index prior, oh man, this is taking too long. Net exposure 34%. Anyhow, where's our CR? Or, it's not CRB, but did I like somehow skip it? I don't know how I did that. I did right there, and I skipped right over it. So this blip right here is what we're looking at, where things were like peaked like you wouldn't believe, and then it's come back a lot. Yeah. So I think that the name of the game in this inflation story is really this line, you know, holding the support line. If we hold the support line, yeah, I think that is a tell, but the tell really is India and China, and they appear to be strengthened. And I actually looked at Taiwan. I thought I put that in here. How did I? Apparently, I somehow didn't make it in. But anyhow, I had Taiwan, and Taiwan is looking like things are opening up as well. So we're kind of getting there. And that's it for today. Big picture. In summary, we're in a bear market, even though other people won't agree. The trend is like is more of a downtrend currently, so the vector is down. The yield curve is inverted, and the cost of capital is going up. So all those things portend multiple contraction or margin contraction, because at a certain point corporations like Pepsi can't continue to pass on the cost. And Pepsi's interesting. They're like, if you look at them, they've basically been going up for many years straight. And Bloomberg every day at 10 o'clock plays this video about Pepsi and these bottle caps, and how in the Philippines they had this bottle cap thing where you flip it over and look at it, there's a number, and you could win like $1 million. And I guess they issued too many, and it just caused havoc and people getting injured, and I think even death. And then Pepsi tried to cover it up, and they did some shady stuff. Yeah, so Pepsi's, I'd like to look at their board and see if it crosses over to AT&T, just from an ethical standpoint. It makes me, interesting story behind Pepsi. So I appreciate your time. Thanks for tuning in. This is Green Bicep, where you get only signal here, and I'll be back next week. And Green Bicep out.